Hello people, right, bit of a different video today because something chimed with me yesterday on Twitter. Someone said they're struggling because of language, and I realise that's a problem if you're not an English speaker, but I just wanted to keep things simple and really just try and hammer home how simple trading really can be. And you know, I'm sick to death of reading, and I know I shouldn't read them, I should just stop, so-called furu guru traders, you know, people that should know better, to be honest with you, saying things like, oh, one thing you know about the charts is they're random, and the one thing you can guarantee about price is that you won't know which way it's going. That's why you have to have money management in place, and you have to trade a penny a pip and have a 5-to-1 reward risk ratio. Or someone else saying you can't, you know, someone who's got a high win rate can still be an absolute loser. You know, why do people do this? Why are they twittering absolute baloney? I nearly swore then. Because if you just look at this chart, I've taken everything off the chart, moving averages, round numbers and all that lot, and just break it down to basics. You know, I'm a proponent of the 2B reversals and the 1-2-3 reversals. Look them up if you haven't heard of them. Vic Sperandio. And that is what led me to have the belief in the precise nature of price action, how it reacts to the highs and lows of candles and so on and so forth. That is because these are points of interest. The price has pushed up, the sellers have come in, created that wick there on this green candle, and that's caused something to happen. So it stands to reason when price comes back the other way, it's likely to create a similar sort of reaction, uncertainty, whatever you want to call it. So let's just suppose you don't know anything about 3 candle reversals, and all you want to do is look at price action. Don't have moving averages on your charts, there's no need. You know, if you're relative novice to this, my advice would be is just learn how to draw your ascending and descending trend lines, and then wait for price to do stuff. And the reason, and I've talked about this many times, but if you're new to me, my channel as it were, the reason this RSI is on here is because I have shown myself through countless thousands of hours of studying price action, and it's all there for free on our charts. This is all you need on your charts, your candles, and then you can draw a few lines. You can draw horizontal lines and watch price react to them. You can draw descending and ascending trend lines, and then with the knowledge of the solidness, if you like, the quality of something that's just telling you momentum. This is a momentum indicator. When power comes into the market, when sellers come into the market, it moves rapidly. When buyers come into the market, it moves rapidly as well. These lines are arbitrary lines. The guy that wrote this put the 20 level there. A well-respected trader I know added the 40 level and the -20 and -40. Oversold, overbought. That's all you need. And then if you see an instance where we're overbought, and then you get a big red a gap between the green and red bar like this, then you will most likely find on the lower time frames, I haven't looked at this, so apologies if it doesn't work, but there will be a potentially a drop below zero, and then what I call a bust below the zero line, pull back, break and close, and that will give you the trade. And there it is there. So if we go back to the H4, we will hardly have even moved below. At that point, that was the big move, of course, but this is just looking rather weak. So always use your lower time frames to analyze what the higher time frames are showing you. It works, this thing. You've got thousands and thousands of hours of or years of charts to study it. One good thing, as I said before, it doesn't repaint, so you can clearly see everything you're looking at is correct, precise. So let's talk about the 2B reversal pattern and ascending and descending trend lines, and how you can use the RSI to enter the trades. Just 3 or 4 different things on your charts and you're good to go. All of these big moves here on this H4 chart will look like a 2B reversal or a 1, 2, 3 reversal on the lower time frames. Here, and then obviously you've got them on the current time frame, this H4 time frame. This is a 2B reversal. You've got the swing 1, swing 2, swing 3, and then you draw the line that Vic tells us to do, and the candle that breaks through that line is the I think it's termed as the poke bar. You draw a low on the low of that candle, and when price breaks through there, you're good to go short. So if we drop down to the H1 time frame and look at this whole pattern, it will be more obvious as a 2B reversal. I trade my 3 candle reversals now, 3 CRs, so I'm not trying to confuse you. I know it does cause confusion sometimes, but the whole point of this video is that you just don't need any noise on your charts. You just need to believe what you can see in front of your eyes. So that was our level that we considered reversing. We've dropped down the time frames. We can look and see what happens when price breaks through that level. There was a break and close, RSI bust, break and close, and look, price crashes. If you want to wait for a pullback to test old support as new resistance, do so. Watch what happens to the price. Drop down to the lower time frame so that you can see this pullback. Might need to go down to the 15-minute time frame, but there you can see we've reversed to the long side. Let's go to the 15, and when we get our break and close below that level, you can do precise on these things, on this RSI histo. Do it a few times because the readings quite often are different. 1958 minus 19.5818. Double check it. That's the same. And then if this one has broken the low, it doesn't matter whether it's 1 decimal point, that's a trigger to go. Minus 20.7 is clearly a very clear move to the downside. That was our trigger to go short, and lo and behold, if you'd entered, you would have had minimal drawdown or next to no drawdown. 7 pips with a 42 pip move. So, you don't have to complicate things. I know I have, because I've taught myself through, as I say, thousands of hours of study what to look for. But all you have to do is look at 2B reversals. They are everywhere. 1, 2, 3 reversals, and use the RSI histo. Now, don't take my word for this. Excuse me. Go away, build a chart like this, a template like this, and do your own analysis. You know, as I mentioned about ascending and descending trend lines. Well, we've got a 2B reversal formation here. That's Victorandio's level there, the low. This is the break through it, either one of these candles. What he says is subsequent candles. So anything that breaks through after can be considered, so you can get a better entry basically. And then lo and behold, so this is our that's our sort of final low. And it doesn't matter, you could say, well, what about the one there? Well, it didn't reverse on itself. Swing 1, 2, it needed to close above there, it didn't. That's how you get protected from getting into trades down here. So what about this one? Well, yeah, put the low on there, it's not broken through, so it hasn't validated itself as a 2B reversal. So you're protected by just drawing horizontal lines on the charts, and as I said before, the break of that level is your trigger to start thinking about entering a trade. What do we know when resistance, this is the stuff on the left hand side, in this instance in a down move, gets broken by price with a close? I like the close, Victorandio doesn't mention it anywhere. You get a pullback, and that's what that one. So you're ready for that. Once again, you can go down on your lower time frames. Notice also we've got the oversold, massive difference between the bars there. That's the momentum as opposed to what we've got here with the green and red. Very, very important to keep an eye on that as well. Drop the time frame, and here we are now. This is where we're watching the pullback. Once this turned green, you can start to, providing it, you know, we're not using the 3-bar reversal, but if you've got a pullback and it's reversed against itself with the 3-bar reversal, you must have a reversal to the opposite side. But we're just talking about 2B reversals and the RSI histo. We've already had that huge, great big trigger move on the higher time frame. Now you can actually see we have clear, crystal clear divergence as well. A lower low that failed to make a lower low on the RSI. You can now draw a ascending trend line. Getting back to the simplicity of learning to draw ascending trend lines. The minute that well, actually there was an earlier one here. The minute that high is broken by price with our reversal candle on the 2B reversal, you can connect that to that. That's an uptrend. Then you apply your knowledge of the RSI. Well, drop down a time frame, and you will start to see a bust up, pullback, break and close. Break and close. No surprise, that is the same candle. That is actually a 3-candle reversal. There's the low, high, high, low, lower, high, lower, low. Break and close, bust, break and close, and you've now got your move with very little drawdown. And that's just simple reliance upon the RSI histo alert and ascending and descending trend lines and a little bit of divergence. 2B reversals, that pattern, you need to go away and prove it to yourself. That pattern occurs all over the place. I haven't checked this, but this will be a 2B reversal here, I expect. Daily chart down to H4. There it is there. That's the last pop up that's broken by that new high. That's the trigger candle. There's the break and close below. Once again, massive move between the, as opposed to these. You could just limit yourself to only trading the ones that break the 20 level. It's up to you. You work it out. then down to H1. Well, you can see on this chart we've actually got a break and close here as well. Beautiful. But on the lower time frame, because you should always wait for the pullback, because you will get a pullback more often than not. The only caveat I would put to that is if you're on a 5-minute chart or and watching a 15-minute trade workout, when we have the volatile times of the market like Frankfurt open, London open, so on and so forth, price may well go without you because the big boys are working the trades then. And that's something that I don't mention, I've never mentioned, I don't think. One time I have mentioned a guy that I listened to a podcast, and he was a professional trader, and he was talking about the algorithms, and this is going back 10 years now. And he said, you can watch the charts and it's like a switch is flicked. They switch the algorithms off at 6 a.m, say for example, big boys start to play, or maybe 7 a.m, the Frankfurt Open, UK time, that is GMT. Excuse me. The big boys start to play, we're going to get rapid, erratic movements. Still tradable, but more erratic. Then they switch the algorithms off at 10 in the morning, and you'll see sideways more often than not, unless it's affected by a news article or something like that. Back to really quite steady trades. And the point I'm making is, if you're waiting for a pullback in the busy times, you may get left alone. But if you're waiting for a pullback when the algorithms are running it, the algorithms, in my opinion, are designed to make the most money out of it. So it stands to reason they'll be the things that are creating the to and fro of the price. So as such, it's more sensible to wait for the pullbacks when you're in the ranging period, the algorithm period, and potentially change your strategy, entry strategy for the volatile periods. I hope that makes sense. So that's it. I'm going to run out of time on this one, but hopefully, guys, the whole point of this video is to say everything you need is on your charts, absolutely everything, and all you need is something like, I'm not suggesting you rely on this one, but I think it's brilliant. Give it 11 out of 10 for value, and candlesticks, and draw your own horizontal lines and vertical ascending and descending, and then just wait for price to do its stuff. In this instance, we could be just waiting for a reversal. Add to that the ADR that we talk about, and I've made videos about. Look at the playlist. ADR, if it's extended, like it stands to reason, if that gets to about 150 or something, and you're looking for a reversal, it's highly likely you can enter it using a 2B reversal, or a 1, 2, 3 reversal, or a 3 candle reversal, and most importantly, the RSI histo to validate your entry. Okay, thanks for watching. Have a good day.